Are we witnessing the end of fiat? We are witnessing history in the making. Forget everything else for a moment and look at the precious metals markets. We are seeing daily moves that are simply staggering. Gold is making $100 jumps almost routine. It's smashed through the $5,000 ounce ceiling, except it wasn't a ceiling because it just kept going and going. And the real story, today at least, is about silver. It's on an absolute tear. When I looked earlier today, it was up about 5.8%, breaking through $109. I repeat, up 5.8%. I think it's probably gone higher since. We're going to look at that in a second. Platinum and palladium are being pulled along by this explosive ride. Now let's go straight in and look at what's happening to the price of silver. Here we see the price of silver straight away, and I can't believe my eyes. I'm seeing a price of $112.70, up over 9% on the day. Oh my goodness me, it's now $113. Let's just make that, get that all on the screen. Auto scaling here. If I bring the chart here, you can see that it looks like, if I go tighter here, it looks like the silver price is going parabolic. The same can be said of the gold price, if we look here. About a year ago, I sat here and talked about what the end of the fiat system might look like. I suggested that we wouldn't just fall off the cliff one day, wake up and find that nothing exists anymore, but I said we might see a final face-ripping melt-up, a huge rally in precious metals before the system breaks. I said we might see a period where asset prices seem to go parabolic as confidence in the currency evaporates. Well, take a look around. What we are seeing now in the gold and silver markets, and even the stock market to some extent, looks a little bit like the melt-up I described might happen. Now, whatever's going on, this is not a normal bull market. Gold and silver are not simply keeping pace with the rate of inflation at 2% a year. Absolutely not. Gold and silver are front-running what they see might be coming down the line. What they see is potentially a massive monetary expansion as governments move to pay off their debt through newly printed money, potentially leading us to a very high inflation rate or even worse.
Silver explodes to $113 daily as gold passes 5,100. This is not a rally, but the visible end of the fiat system. The Japanese yen carry trade is unwinding, violently forcing a global fire sale into metals. Simultaneously, the COMEX silver exchange faces a historic physical shortage with March delivery demands set to be 7 times normal. This is a systemic melt-up. The only safe play is now mining stocks, which will boom even if metal prices just stand still.
What is going on in COMEX? So we'll look at this chart here. So what I would like you to look at here is you can see that as of this is 9th of January on the left-hand side and 22nd of January on the right-hand side. So I've taken 2 snapshots of COMEX on these 2 dates. We can see at the top the total amount of registered silver, which is available for delivery now and potentially planned to be delivered into the maturing contracts, the contracts which mature in January. We have 123 million ounces on the 9th of January. And we've also got the eligible silver, which is silver in the right form, but not actually warranted, ready for delivery yet. Could be put into eligible for delivery at any time, become registered at any time. And that was 315 million. Of course, part of that 315 million ounces is owned by institutions who have no intention of ever selling on COMEX and don't intend to deliver it as part of the deliveries. But in theory, there was, between the two, 439 million ounces of silver on COMEX. That's quite a bit. It's about half a year's supply from the silver mines, even though some of that will never be deliverable. If we look today, this was actually from last Friday, I think, 22nd of January, were the last figures I could get. The registered silver, which was 123 million ounces, is down to 114 million ounces. That's the amount of silver which is ready to be delivered in respect of maturing contracts. So that's down. And the amount of eligible silver is down from 315 million to 302 million, which means the grand total of silver held by COMEX has fallen from 439 million ounces, 439, to 416 million ounces, 416, 439 to 416. It may not seem like a big fall, but what I want to look at here is the open interest in the March futures. There is massive open interest in the March futures. Back on the 9th of January, the open interest in March on silver was equivalent to 508 million ounces, which was more than all the silver held at COMEX. That number has increased. Now it's 105,000 contracts, up from 101,000 contracts. That number is now 528 million ounces, which potentially could be called for delivery. Now, nobody realistically expects it all to be called for delivery because historically, most maturing contracts at COMEX are rolled over. They're not delivered. People buy back their short position and the longs don't ask to deliver, and then the shorts roll it out to a future month, and the shorts buy for a future month. The longs buy for a future month. So basically, a lot of people roll over their contracts on maturity. But in theory, we have 528 million ounces here, which might be called for delivery. It's a lot. When the total number of ounces available for delivery is only currently 114 million ounces, and if I add the rest, which could be converted potentially, another 300 million ounces, the amount available is only 416 million ounces, less than the 528 which might be called for delivery. Silver delivery notices month by month, and I've got it from 2024, 2025 and 2026. And I'm just going to focus on January, but you can see the pattern with the other months. They're all, every single month, month after month in 2025, the amount of silver demanded for delivery was much higher than the amount of silver demanded for delivery the year before. But let's look at January. In January 2024, 1,360 contracts were called for delivery. In January 2025, nearly double that, 2,370 contracts were called for delivery. In January 2026, this January, which is not quite finished, we've had 9,181 contracts called for delivery, which is 6.75 times normal. 6.75 times at least the 2024 number. So what's been called for delivery in January if I translate that into ounces of silver, there's 45 million, let's call it 46 million because it's 45.9 million, 46 million ounces of silver have been called for delivery in January 2026. And just to put that back in context, there's only 2 million ounces left in open contracts, so it could potentially go a little bit higher. Now let's step forward to March, where we've got this 528 million of open contracts on COMEX, and look here at what happened in March last year. Well, in March last year, in 2025, there was 16,000 contracts called for delivery, compared with 5,000 the year before. So nearly 3 times as many contracts were called for delivery in 2025 as were called for delivery in 2024. Now, what happens if we have the same impact in March this year as we had in January, where in January the figure was 6.75 times the 2024 figure? So what if the 2026 calls for delivery are, let's say, nearly 7 times what they were in 2024? Well, in 2024 we had 5,000 contracts maturing, 5,487, 5,500. So that would be about, oops, I've come off that, sorry, beg your pardon. That would be about 4,000, let's go back to there, that's what we wanted. There we are. So that would be, if we go 5,000 times 7, that'd be about 35,000 contracts, but because it's 5,500, let's call it 40,000 contracts would be called for delivery. So in March 2024, we had 27 million ounces called for delivery. What if it's 6 times that or 7 times that this year? That would be, keep coming off that. That would be, let's see, 30 times 7. That would be about 200 million ounces out of the available 400 million ounces, but certainly a lot more than what's registered. So it's possible that we might find that COMEX is overwhelmed with deliveries, and this could be what people are, why people are rushing to buy silver now, because they're not sure whether it'll all be there when March comes if they need it. So this is a flight from currency. Now, one of the things which might be triggering it at the moment is emanating from the other side of the world. And I don't quite know how that fits in, but I'm going to describe it to you, and maybe some of you can see how this is impacting the precious metals market. For many, many years, even decades, there's been a seemingly free lunch available to large hedge funds and large banks. Not to you and I, but that free lunch is known as the Japanese yen carry trade. In the Japanese yen carry trade, large banks or hedge funds would borrow billions, even trillions, of Japanese yen at near zero interest rates. And they would invest that money in higher yielding assets, such as US Treasuries or Brazilian bonds or the stock market. It didn't really matter where they invested the money. Borrowing Japanese currency seemed like a free lunch bet because, one, the Japanese yen was likely to continue falling, and two, the interest rate that you were paying on the loan, the money you borrow, was effectively zero. So you just had to invest in almost anything and you could make free money. And as long as the yen stayed weak, it was like a free money printing machine. But that free money machine is starting to break down. For many decades, the Bank of Japan has been trying to create inflation because Japan's been in deflation. It's finally got its wish, and inflation is running hotter than they can handle. To fight it, the central bank, the Bank of Japan, is being forced to abandon their zero interest rate policy, ZIRP. they're being forced to abandon ZERP. And what's happening? We're seeing a violent sell-off in Japanese government bonds, known as JGBs, Japanese government bonds, and that is sending yields in Japan soaring upwards. So all we need is for the gold and silver prices to stand still from here, and mining companies are going to be reporting for many quarters to come much higher profits. And those profits are almost certainly, I mean it's like 100% certain in almost every case, going to be much higher than is currently forecast by the analysts. Most of the forecasts made by analysts were made 2 or 3 months ago. They were made 2 or 3 months ago at the time those companies brought out their last earnings reports. So silver might have been around $40 or $50 if you're lucky, but no, probably not even, probably 30-something dollars. And the gold price would have been pushing through $4,000 and certainly not $5,000 where we are today. So those forecasts which were made 2 or 3 months ago are very out of date. And when the miners announce their next set of results, which for many will be the results for the full year, probably announced in February or March in many cases, those results are going to, at least for the last quarter of 2025, look better than they were for the last quarter of 2024. So to bring this all together, the explosive moves that we're seeing in precious metals looks to me like it's a clear signal that we are entering a new phase. Now, what about the timeline? The end of the fiat system could take many years, maybe even decades. I don't think so. I don't think it can last that long, because government debt is clearly out of control globally. Something has to be done to rein it in. They could raise taxes, but I don't think there's an appetite to do that. They could cut spending. There's definitely not appetite to do that. Or they could do the easy option, which is what I think is going to happen, which is invite the central banks of this world to buy government debt. And where does the central banks get the money from? They print it. So as the debt expands, I think we're going to see central banks engaging in quantitative easing, printing money to buy the government debt to stop the yields rising any further. Remember what I just looked at in Japan. And that, of course, is throwing a lot of money into the system. I think people are front-running that, saying this could be the start of a situation where the amount of money coming to the system is so large we start to panic. Everyone else will start to panic, so I want to be ahead of the curve. So I'm running to put gold and silver in my portfolio ahead of time. So maybe this gold and silver rise that we are seeing is not the bubble that some people are thinking. Maybe there is no pin, or maybe it's real.